The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, Money Masters and Treasure Hunters out there. Welcome to The Trader's Edge. I'm your host, Steve Rhodes. It is Fabulous Friday. Hopefully you're off to a fantastic start of your work day, maybe your play day, maybe you're listening to us overseas. We absolutely do thank all of our listeners out there. We know we've got them around the world. And if you're starting your weekend, have a great weekend, folks. And if you're about to start your weekend, maybe in a few hours or so, just simply have a fantastic weekend, folks. It is summertime out there. And folks, I absolutely do treasure your presence here today. And my outcome is to help you to become a better money master. That is almost what it's all about. What it's really all about, folks, is laying the groundwork to be able to lead an inspired life. Leading an inspired life, folks, that's really what you want to do. That's what you want to be able to teach your kids to do. That is how they end up doing better than each of us do. Teach them how to lead an inspired life, folks. That is what it's all about. Now, my personal income each and every day, always to be able to increase my skills out there. So let's go take a look at one of those skill sets out there. I call this the pursuit of mental development. Now, everybody out there knows that I'm into mental development. I think that is just the coolest thing on the planet. So let's take a look at the perspective of really being able to, continue to develop our skills. So think about it like this. For those of you that have kids, this will be an easy one. From the time, and for those of you that don't, it's also easy. Just go back a little bit in your memory banks, to your earliest stage that you can remember until maybe you're about 18. 18, why? Because we're in, you're at least, most are at least in school, through high school at that stage. And so from the time you're born to the time that you're 18, take a look at that learning curve. I mean, you're just simply consuming information. Well, most people are certainly consuming information. But that learning curve, folks, it is a huge acceleration. Huge acceleration, right? I mean, you get to a stage where almost, if you've got kids, it feels like they know everything at that stage, right? Now, look, I know there's some of you out there that have 13 or 14-year-olds, and you're saying, hey, Steve, wait a minute. When they get to be about 13 or 14, they think they know everything. Well, just go back to the high school. Let's assume that that's a stage where, you're done taking exams, right? Some people go on to college. Certainly have a record number of folks going on to college. Of course, they're getting out of college without being able to get jobs. That's why we want to teach them how to manage money. That's a good thing. But think about it like this. You're out of school. You don't have the requirement to have to read books. You don't have to need to be able to take exams. That learning curve just starts to maybe not accelerate at that same pace from when you were a child to when you, when you turned age 18. So what I want you to be able to do, because pursuing mental development, folks, that's really when it really starts to pick up. That's where you should pick up off of and always be learning. Certainly each of us do from our experiences, but how much time do you actually spend reflecting on what happened yesterday, what happened last week, what happened this week, to be able to build upon it? Just a little moment of reflection, folks. That's all that you really need out there. What I want you to visualize, because it's really all about visualization. It is 100% about visualization. And I want you to go back and I want you to visualize that steep curve, whether it's for you, whether it's for your kids or what have you. Now, just imagine what would happen if you could maintain that level, folks. If you could maintain that steep, not really curve, from A to your B point, it just was unending out there. That's what it's really all about. I want you to imagine, what could you do, folks, if you could continue to learn like that? If you could continue to develop skills like that? Just think of the capacities that you would have within inside yourself. Think about the heights that you absolutely could reach if you maintained that learning curve, folks. That's what I call making the most of your life. And folks, each of you out there that are listening, you are unusual. I mean that in the most loving, the best way, because it's not usual for most people to continue to accelerate that curve out there. And for folks, remember this, I guess, a standard education, maybe if you're trying to inspire your kids, a standard education is going to get you what kind of results? Standard results. But how about an extraordinary education, folks? That's what gets you extraordinary results. So I want you to become a student of extraordinary ideas. That's one of the reasons that we go 7 hours a day here. live at TFNN, from 9 in the morning till 6 at night. Is that, no, that's 9 hours a day. I got to get my math right here. And so, following the show today, you got Tom and I doing the Money Masters show, or maybe, I don't know if we're doing the Nadex Trading Hour today, because we do have a new show from 1 to 2, Monday through Friday, with Daryl Martin out there. That's the newest addition to the TFNN team, doing the Diagnostic Trading Hour on Thursdays. Fridays, we go to Basil Chapman after the Money Master, then back here to Nico DeHaan. On Fridays, David White does the show now from 2 to 3 o'clock, Ken Shreve from 3 to 4, and Tom O'Brien from 4 to 6, folks. That is, one way to certainly be able to continue to accelerate that learning curve out there. Me, I'm a student of patterns, because those patterns exist, folks. You went to work the same way, or you got up the same way, you did the same patterns. That's what goes on in life. You can take advantage of that. How? By just simply understanding the patterns inside the stock charts out here. Right now, you've got the ES Mini as an example, trading out at 1331.50. It wants to get down to 1329. Only 2 points down, but it's trying to make an A to B equals CD down. It's been in a sideways consolidation ever since about 1 o'clock yesterday afternoon. 1 o'clock, 1:10. You can see it, just trending a little bit slightly higher. Quite a bounce yesterday. Could you have foreseen that bounce? Well, absolutely. If you just took a look at the A to B equals CD down that was created, that A to B equals CD down, that A to B, we're looking at a 10-minute chart here, starting out at about 5:30 in the afternoon on July 11th at the price point of 1339. Your first leg down, which created the B point, came down into the 2200 time frame. So what is that? 10 o'clock in the evening on July 11th, when it gets down to 1334. Then what's it do? It makes a shallow retracement, that shallow Hal retracement, because you do, folks, you do see what it is that you want out there. And that's kind of the premise of that movie, isn't it? And so if you take a look at the retracement right up into the midnight time frame, when it gets up to 1336, it did a shallow retracement. What's that mean? It's got a lot of energy to the downside. Well, that energy happened to find its base yesterday right between the 2.618 A to B equals CD down and the pie, that 3 point, wanted a piece of good old American apple pie out there. Now, on the 10-minute chart, when the A to B equals CD was completing, what did it do? It made one of Steve's candles. It made a bullish engulfing candle right there at 11 o'clock. That next candle, what did it do, folks? It confirmed that bullish engulf, and that told us that the A to B equals CD was over. And what was it going to do next? It was going to start making the next A to B equals CD. These breathing patterns, they work on a continuous basis out there. And what you take a look at is that next A to B equals CD up, starts at the low, right down at 1319.75, makes its B point out at 12 noon, pulls back just slightly, and the A to B, the 1-to-1 A to B equals CD, would have taken you up to the 1335 level. Gets up, it finally does, I think, get up to 1335. It does that here this morning, and it does that at 6:40 a.m. Now what you've got going on is you've got an A to B equals CD down that it's just simply trying to make. That's the one that would take you to 1329, folks. Our call number is 877-927-6648. And if we take a look at the just the future market here in general right now, you've got Dow futures up about 25 points or so. The ES Mini that we're looking at, that's up almost 2 points. You've got the NASDAQ up 6. The Russell 2000 really strong out there. We're certainly going to take a look at the index. It made one of my candles yesterday, made a hammer candle out there. Now, what's cool about that is the line is absolutely drawn in the sand. If we, in fact, let's go switch over and let's go take a look at the Russell 2000 out here. I'm going to switch screens, and hopefully you're following along with us on Tiger TV. If you are listening to us on the radio, we thank you for doing that. You can always catch the archive of this show on Tiger TV. This show is archived on Channel 9. The Money Master show that Tom and I do, that is archived on Channel 10. So if we take a look at the Russell 2000 out here, just get rid of the lines because we can always redraw those. What you can see is the Russell was moving down yesterday. The bears had control. The Russell opens up yesterday out at 792.23. The bears push it all the way down to the low of 778.54. The bulls step in right at that 11 o'clock time frame, as we saw on the ES Mini. When it completed its A to B equals CD down, the bulls stepped in and started pushing it up. And you ended up with what I'll call a type 4 hammer candle. Still a good hammer candle out there. That says its support is at the bottom of that hammer candle. Well, the Russell 2000 in the index did not close the gap out there. So you still have an open gap. That is and this is a strong gap out here, most certainly. The high of the June 28th bar out there on the Russell is 775.90. And the low of the hammer candle that came in yesterday, 778.54. If that fails, if you get it closed below 778.54, because the Russell has been the strongest on this bounce up, folks, that is going to send out a blaring message. And what's that message going to be? Probably going to be the blaring message that the king is going to go ahead and take out that weekly high. You know, the king here dealing with a possible triple top formation out here. It's dealing with the high going back into June 1st. That high out there, 83.67. King dollar trading out at 83.88 right now. That's also taking on the high swing point out there going back to August of 2010, August 27th, 2010. The last time we had that triple top out there, that was the triple top that went from the November 2008 into the March 2009. And then the final time that triple top was touched before it pulled back was in June 2010 out there. 877-927-6648. Dow futures up about 29, but the king is on the move as well, folks. We'll be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
JP Morgan out with the numbers this morning, folks, and a beat on the net income side, $5 billion versus, what was it that they had on revenue of $22.9 billion, $1.21 a share. That was after taking about, I guess the total loss on the whale sale, the whale deal, is about $6 billion or so, but still obviously a very profitable company out there. As far as the trading goes, JP Morgan, that's really where it's all at. Closed out at 34.04. Last trade in JP Morgan firing off at 34.97. That's up about 2 7/10 of a percent out there. Wells Fargo also, I believe, out with earnings. Have they released their numbers? They have. Wells Fargo net income of $8.4 billion versus $7.3. Earnings per share of $1.57 versus $1.37. Revenues of $42.9 billion versus $47.2. Wells Fargo having a relatively flat experience here in the pre-market. They closed at 32.85, trading at 32.79 out there. If we take a look at iGate Corp, IGTE, also out with earnings before the bell. Earnings per share of 7 cents versus a loss of 2 cents from the prior year. However, they are down 5.6% in the pre-market. Closed at $16 even last night. Trade right now at 15.10. Also, after the close last night, what do we have out here? We've got Peregrine Pharmaceuticals, PPHM. I believe they were out after the bell last night. They're trading up 11%. They closed, well, I shouldn't even brought this up. Closed at 94 cents, up $1.04. So sorry about that one. That was, you don't really pay that much attention to some of those stocks out there. Let's go to Rick in Nashville, Tennessee. Rick, thanks for calling. Thanks for holding.
Hey, good morning, Steve. How are you?
I'm doing great. How's your day going?
It's starting off pretty good.
Oh, that's
just
great.
Some general questions on swing point volume versus like downdraft volume, and a lot of times the downdraft volume is a lot higher than the swing point volume. But the swing point volume, in you guys' system is more important than downdraft volume. I'm just
correct.
Wondering how to.
Is there a specific stock, maybe chart that you're looking at that might be able to even help you with?
Just all the. If you could find one that has.
You're going to make me go out on a mission to search, are you? Okay.
Well, I mean, the last one that you were looking at with the triple top had a big, a couple big drafts.
Okay, you're looking at the U.S. dollar index. I'd rather look at something else out there that would probably be better. But to answer your point, let me just answer like this. The swing points are really what you are paying attention to. So, if you do have take, for example, so we're going to talk about theory here, and then maybe we'll find a stock chart during the show or something that we'll take a look at. And so let's say that you have a large downdraft, as you say, and then you just simply, make a lower low. And what that's really setting up your B point. Okay, likely. So you know your A point would be up higher, and that would be set up your big point. That would be your swing point as well. So when we talk about swing points, those are usually either A, B, C's, or D's out there. And in this case of your example, what's going to happen is if they get a lower low on lighter volume, it's going to make it easier, quite frankly, to be able to take out that B point. And the downdraft with the volume is telling you that your pressure is all the way down. What oftentimes you'll see happen, Rick, is you might see a bounce back, and the bounce back might get up towards the top of that downdraft area. And that's the place where you would go ahead. That's where your back would be up against the wall and where you would go ahead and consider playing a short position. Now, you'd play a short position on a stock that's selling at $30, $40, $50, $100, $200, $300, not a stock that's at $6 or $10 or $12 or $15. The reason is that because, if you've got a $10 stock, it could only go out of business and you could only make $10. It's got way more upside potential on a buyout or something that just simply you can't control, which you can't control the market anyways. So, take a look. So those the downdraft candles are absolutely important. I've got the IWM out here right now. It had a downdraft on April the 10th. So if we take a look at that downdraft there, that had 101 million shares. Now, that ended up also being the swing point. So when that swing point was taken out, it was taken out on the May 14th, but only 51 million shares. That 51 going against 101 million shares. And what did the IWM do? It went ahead and completed an A to B equals CD, but it moved back up. Got back up eventually on July 5th, above that downdraft before it went ahead and gave it out. So, I'll continue to look for some samples for you. But does that help to answer your question?
Yes, it does. And, the more I continue to listen and
well, go ahead. Tell you what, stay on here, Rick. That way I get your total thought. We come back. We'll let the markets open up. Then we're going to go back to Rick in Nashville, help him with swing points and downdrafts. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. You got the Dow up 47. S&P's up 6, Composite up 12, small caps up 4, Microsoft up 16 ticks, Intel up 9, Google up $2. You've got Site Industries, Cytec, C-Y-T-E-C, C-Y-T is the ticker symbol. They're up 8% this morning, up $4.49. Right behind them, Apple up almost $4. You've got Presidential something or other, I can't see it, PLFE. They're up 36%. Oh, it must be a buyout or something going on here. Let's see. Presidential Life is going to be for purchase price. Let's see here. They've got to buy Athene Annuity and Life Insurance to buy Presidential Life. So if you happen to be in that stock, you've got a nice 35% pop this morning. On the way down, Lexmark, the printer company, down 6% off $1.45. Bridgeport Education, BPI, they've been getting hammered, down another 11% this morning here. Box Ships Incorporated, TEU, down 17%. That's a little stinger. They're down trading out right now at 16, at 6. What is it there? TEU 670. Box Ship prices public offering of 30 million shares at $7 a share. Okay, so that's what's driving that. Let's go back to Rick in Nashville, and we're taking a look, folks. His question is about downdrafts and swing points, and maybe which is more important, or how do you use them? Is that correct, Rick?
Yes, that's right.
Okay, so what I actually did, because it's a stock that we should be watching for, and, you know, Rick is one of our treasure hunters out there, but he sent me off on a mission to go find a stock chart. So I'm going to go ahead, and I appreciate that. And what I'm going to do, Rick, is we're going to take a look at IBM, because I think it's an important stock chart to actually watch today. You know, this will give you an indication of whether or not the market is going to bounce. So, but irrespective of that, let's take a look at it. So IBM, folks, and Rick, what I want you to take a look at is the first downdraft that we see. And I'm just going back to just some recent data. So we're looking at April 18th, 2012. IBM has a downdraft, if you will, and that downdraft on April 18th, 10 million shares. Goes from the prior session to 6 million shares, and so you've got a little bit of a downdraft there, okay? Then what it does is it trades just a little bit lower. So your actual B point, your swing point on this is April 23rd. Only has 3.6 million shares. So the way that you put this together is it's telling you that if it's going to be easier, in this case here, for IBM to make an A to B equals CD down, because it only has at the swing point, it only has 3.6 million shares. Now, how you're able to use this information, how you're able to use those downdrafts is, you know, markets are going to breathe. They're going to go up and down. In this case here, you might be looking for a place to short the market. What you're looking for is there's a couple places where you can take a look at. One is getting to the top of the downdraft. The top of the downdraft here inside IBM on that April 18th area would be at 204.07. The other place that you can look at is the candle or candles right before where you had a little bit lighter volume, because that's in essence where you had the first break from the stock. Is that making sense to you? I want to make sure that I'm communicating okay.
Right. So the swing point, is it right there?
No, your swing point is right here. It happens to be April 23rd. That's your swing point. So take a look at IBM. So what it did was it bounced back up to the area where it should have, because it had, as it got up there, the volume on the way up wasn't anywhere near that downdraft candle. Okay, it wasn't anywhere near that 10 million shares. Even the candle before it had 6 million shares. As IBM was getting back up there, it was doing it with 2 million, 2.3, 2.8. Didn't even have the volume of where it actually broke from. So that was actually your first signal of a place where you could go short inside IBM. Now, what it did was it made an A to B equals CD down. We did more than a 1-to-1 A to B equals CD down. Your A point is April 3rd out there at 210.69. Your B point right down there at April 23rd. And the C point looks like it probably will just use May 3rd out at 208.92. Now, what I want you to pay attention to is that swing point, April 23rd, when the market came, and I'll draw a line on the bottom of the screen here, just be easier for you to see the volume. So you'll see the volume on the B point here. It became very easy for IBM to bust through that area. And the reason is that swing point on April 23rd, I'll draw a line along the swing point, the bottom of it as well, because as price was moving into that area, more specifically clearing that, so as it moved in there, it did that on May 17th with 5.6 million shares. At 5.6 going against 3.6, that swing point. Then you actually close below it, and you do that with 5.7 million. 5.7 again going against a swing point of 3.6, telling you it's going to do a 1-to-1 A to B equals CD down at least.
Yes.
Okay? In this case here, you know what IBM did was it had another downdraft. It had that next downdraft was on May 31st. Right, the next time that it had any volume on the way down. And as I said, you can go back to the prior candle. Well, in this case here, you'd actually go back to the candle on May 29th because that was actually a swing point candle, 3.6 million shares. Now, as IBM came back up into that, it did it with 6 million shares. So does it with 6 million shares, says, okay, maybe it wants to seek out some higher price. Well, where could it possibly go to? Where it could possibly go to is back to that original downdraft candle from April 18th. See, that had 10 million shares, and the low on that is 200 even. Take a look at where IBM, when it starts to bounce back, where it runs into that overhead turbulence. Remember, $200 even, that had 10 million shares. It actually gets back to $199.99 with 3.2 million shares. No way was that going to be enough volume to push back into that original downdraft. So you're looking at swing points to help you to understand A to B equals CD down. You're taking a look at downdrafts or updrafts as areas of resistance or support during the moves. And help you to add positions. And does that help you out?
Yes, very good. Thank you very much.
You bet. Thanks so much for listening. Thanks so much for calling. And folks, if you didn't, get that, or you're listening on the radio, go catch the archive of this show. That would be the absolute best thing to do. You can replay it over and over again. Then you too can give me a call, just like Rick did. It's pretty easy. You just dial 877-927-6648. So let's continue on here with IBM. And IBM yesterday closing the gap, I believe. It sure did. It tested the gap. Now, IBM had a breakout on January 20th. That breakout was with 13 million shares. I'm going to go ahead and clean the slate here so we can take a look at that. Let's draw the new lines in the sand out here. We're going to go ahead and take a look at where IBM broke out from. It broke out on the January 19th. January 19th gets up to a high, 182.36, closes at 180.52, does that with 8.5 million shares. Boom, the next trading session gaps up with almost 13 million shares, 12.8 million shares. That gap finally getting closed yesterday. Again, if you take a look at volume as price moved in there, way light on volume. If we take a look at the easy one, when I say the easy one, I'm talking about the candle the day before, like we were talking about with Rick, where it actually broke out from. That candle had 8.5 million shares. When IBM came back into it yesterday, did it with 4.9 million shares. Not enough to bust it down. So as we were taking a look at downdraft candles with Rick, where is the next area of some turbulence with IBM? Well, the next area is the downdraft for May 31st that had 9.2 million shares. So could IBM bounce up to that area? Absolutely. In fact, it would make sense on a bounce that it would get up there. When it's coming up there, if it's coming up there with volume, meaning more than 9.2 million shares, says that it wants to go at least attack the swing point. And the swing point out here, the most recent one, is July 2nd, 2012, with only 2.8 million shares out there. So that's how you can benchmark volume. And a great way to benchmark volume, I believe that Tom does a webinar here maybe this coming week. Or sometime in the next couple of weeks for all those folks that were fortunate enough to go ahead and take advantage of that incredible Tiger Dollar promotion that we had out there in the marketplace. So market is up $92. What's it really all about? So let's take a look at a couple of divergences out here. And the first one is going to be in the currency market, because it really is all about the currency market. It is really all about King Dollar, and it is about the euro. So we're going to take a look at the euro chart out here. Now, the euro, when you're taking a look at here on the screen, is a beautiful butterfly pattern. I mean, when you can find butterfly patterns, when you have sacred geometry like this, folks, it is telling you it's going to be an area where you're going to either see some strong, in this case here, this is a butterfly buy opportunity, where you're going to either see some strong support, or if it fails, it's clearly telling you that what it would do is it would go and it would make not a 1.272 butterfly like it did here, but a 1.618 butterfly. And that's, in fact, what the euro may be doing. But yesterday, it made a new butterfly pattern. And so let's go take a look at that. And what that sets up, remember, we're taking a look at the weekly chart on King Dollar. If it closes up above, I'm going to use the 84 number. It's not exactly 84. But if it closes up above 84, says that the King wants to move higher right now. If it doesn't, says that on the triple weekly test, it would want to pull back. Well, what's that all about? It's really all about this pattern here that I'll draw in here for you for the euro. That is another butterfly pattern out here. We'll put both those butterfly patterns together for you. And this makes a 1.272 butterfly pattern. So what's really great about these patterns out here, especially when they form on a daily chart, is your line is drawn in the sand. That means if this area here fails, what I can tell you on this smaller butterfly is that where it will trade to when it breaks, if it breaks through this area here, it'll go to the 1.618 area. Where's that? That happens to be right at the 1.20 range. When a 1.272 butterfly fails, that's where it will head. If this 1.272 butterfly succeeds, folks, where this will bounce to, just simply a dead cat bounce. A likely spot that I think the euro wants to trade to is 123.848. Give or take a few ticks, folks. That is nothing more than a dead cat bounce, a 0.382 retracement of that A to D leg that is out there on the euro. Now, what you're going to want to really pay attention to today is that, I'm going to go ahead and erase this off the screen, is that the euro, if it closes above, let's see here. Let me get my right figures. If it closes above 1.22377 or 1.22392, what's that going to create? You're going to have a butterfly pattern, and then what would it be doing today? It would be giving you confirmation because you would have that bullish engulfing candle. And what's that say? It says for whatever reason that the euro wants to bounce higher. So you've got a pattern. It would be giving you a confirmation today, and boom, you would, if you were trading the currency pair, you would start buying any pullback, any retracement on shorter intraday time frames, whether it be a 10-minute, 15-minute, or 30-minute chart out there. So that is really as far as I'm concerned, there's really only one chart that you have to pay attention to. That's the euro-US dollar, to get a feel for what's really going on inside the marketplace out here. If we go take a look at, just switch back to the King here real quickly, so you can see the King now pulling back off of that triple top test. And what you want to do is you want to certainly be aware of the last time that happened. Why? Because patterns repeat. That's just as simple as that. Patterns absolutely repeat out there. Remember, we talked about the strength. We talked about the hammer candle yesterday in the Russell 2000. Did that in the futures marketplace as well. If we go take a look at the other divergence that I pointed out to folks yesterday was what's going on over in Germany, what's going on with the DAX. The DAX right now is up 110 points, up 1 7/10%. When you take a look at that red channel line, what is the DAX doing? It's testing it for sure. and it's attempting to get back into it. But more important than that, really, other than the channel, I think, is the price action in the DAX. The price action in the DAX, we're taking a look at the June 29 swing point. In the U.S., around the world, June 29th was a big candle, it was the largest gap up inside the New York Stock Exchange. That was closed out yesterday. That gap got closed. A huge gap. Excuse me. On the pullback in the U.S. markets got bad. The S&P got below the June 29th candle, rejected that area, closed higher yesterday. But the DAX over in Germany, folks, absolutely stronger than the U.S. market. So what does that mean? How do you put that together? Well, one thing is, we talk about it being a one world market out there, but, is the DAX just simply showing more strength than the U.S. market? Maybe because of bond purchases or something over in Europe. There's something out there. I haven't totally put it together out there. With the euro getting weaker, though. All right, with the euro getting weaker, just simply in repricing, stocks as a product, if you will, that would make sense. That you could see higher price. But it's going to be important today to watch the DAX, see if it actually tries to get back inside the uptrend channel out there, or if it's just one more test. It failed the last time that it got in there. It got in there back in July 5th, July 6th, and it failed. It failed on July 6th. I apologize. It failed July 6th. It got back up there July 5th and the 3rd. Let's go take a look at the stocks that are popping and dropping out here. See what we've got. Let's go take a look at Bridgeport Education, just because, as Tommy likes to say, they're getting roasted and toasted. So let's close out all these windows. I didn't mean to do that. Well, there goes my DAX chart. Let's see here. Close all. There we go. So let's go take a look at because they're going to have a BPI out here. BPI. Another down. These guys are like going out of business. I didn't say they're going out of business, but they're like going out of business. Look at the look at this stock chart. Just absolutely pummeled here, folks, all the way back down below or very close to the original IPO dates. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. Have the Dow up 103, S&P's up 11, Composite up 14, small caps up 7, gold trading out right now at $15.91, up $26. Let's go to John in Boston. John, thanks for calling. Thanks for holding.
Hi, Steve. Thanks for taking my call.
My pleasure. Always good to hear your voice. How are you today?
Good. I wanted to ask you about gold.
Okay.
You think we put in the bottom?
Oh,
GLD?
you know that what gold is doing here. I'm going to pull up the gold contract first. I know you called about GLD, so let's just take a look at what gold has been doing here. Is just simply been traveling in a relatively tight trading range. Now, tight when it comes to gold, we're talking about from the 1540 area up to the high of about 1627. So it might not seem too tight, but it really is a very tight trading range. You know, gold trading up right now, I think all gold wants to do is either test the 1600 to 1628 level. In order for gold to really break out here, in my opinion, it's got to break above the 1628 level out there.
1628.
Yeah, and it's at 1590. You know what it's doing, and I'll go take a look at the GLD here real quickly. On the gold contract, the 200-day exponential moving averages act as resistance every time that it has gotten up there. So on GLD, I'll see if we can put that same chart out there, put the same moving average out there, see if it's doing the same for you. So we'll try to set that up here. Moving averages, let me see where I've got that stored here on one of these 50, 200. Did I say it was a 200? I think I said it was a 200. Yeah, so I've got the 200. There we go. Okay. So if you take a look at the GLD, what that would set up for you as an area to take a look at from a resistance standpoint is going to be 155.39 right now. Okay. And
it may be a good idea to wait for the 50-day to go above the.
Well, I wouldn't take it. The time to have taken a long position would have been yesterday, as was making a 0.7, as the gold contract was making a 0.786 retracement, and so I wouldn't go into a long gold position here. You're trading at 154.45. It's got to clear 155.39. That's not that much away from here up to 158. Gold is just, I think with the dollar, is going to continue to move higher. May not do it this week, but what you will see is I think gold will come back and test the 1530s again.
Okay, thank you very much, Steve.
You bet. Thanks for calling. I appreciate it. Let's go to Bill in Colorado. Bill, thanks for calling. Thanks for holding.
How are you, Steve?
I'm doing great. Yourself?
Oh, just fine, thank you.
Great. You wanted to take a look at J.P. Morgan. Tell me what you're doing or what you're thinking of doing. And
well, I bought it this morning. It seems to be going up, so I bought a couple calls on it. I thought I might get a quick profit on it and get out.
All right. Well, that sounds like a good plan. You got a plan. J.P. Morgan is going to run into some turbulence when it gets up into the 37.99 area, and you're trading at 35.
37.99?
Yeah, 37.9. I'm sorry, 36.62. I apologize. 36.62. If it gets up and it tags that, it's going to need some real volume. And, pretty decent volume in it so far today. But this also is in a relatively tight trading range. All right, Bill?
What do you think of FAS?
FAS. We're going to, the show is over. I wish I could get it to you. Perhaps Tom and I will be able to look at it during the Money Master show. But, Bill, thanks for calling so much. And, folks, have a fabulous Friday out there. If you are staying tuned, Tom and I will be up next. Then we go to Basil Chapman. And just have a fantastic weekend, folks. And I'll see you on Monday if you're leaving us now. Take care.